Hello everybody, good morning. We are coming to you live from London and welcome to this webinar. I hope you can all hear me. I hope all the technical issues are fine. We're here to discuss this topic, consumers and their impact on strategies for the cash cycle. We've got some great speakers to help us look at this issue. But before we start, we just wanted to run through a few background things. This is me. My name's David Fagleman. I work for Cash Services UK. I'm their Policy and Research Manager, and I will be your host today. If we can start with some housekeeping. On the right-hand side of your screen, you should see a panel, and there should be a chat function there. If you have any technical issues, you can ask my colleague Stefan a question through the messaging system. And if you have any questions for our panelists about the discussion, please send them through there. We've already had some questions through when everybody signed up, which is really great, and we have some time at the end of the session to go through those. We've created this program to spark a bit of debate, so please don't be shy. Get your questions in and get involved. Secondly, this is an interactive session. There are going to be opportunities for you to have a vote on a few questions. And finally, we are recording this, and if the technology gods have been kind to us, this will be available to view and listen to again in the next couple of days. So, as I mentioned, I work for Cash Services. We're based in London, and we provide strategic direction for wholesale cash management in the UK. This includes effective advice on risk management. We undertake research into the changing role of cash, and we facilitate communication with other key stakeholders across the cash cycle. We're hosting this session in partnership with Currency Research, who are an international organisation that believes education and communication are fundamental to growth and innovation within the currency and cash handling industries. Thank you very much to Currency Research for their support in this session. It's been great working with you. So, to begin exploring this topic, this webinar is going to focus on consumers and their demand from payment instruments. And we're going to continue the debate on the 21st of March at the European Cash Cycle Seminar in Budapest, where we'll have a panel session face-to-face where we can develop more the right strategy for the cash industry. And there'll be more information at the end of the webinar on how you can register for that conference. Today we're going to explore the following themes: the role of cash in the modern economy, the rise of non-cash transactions, and at the end we're going to ask, do consumers want digital innovation? To help achieve this, we have two excellent panelists, Mark Trevor and Steve Turner. Mark is Commercial Director at Vaultex, a thought leader in cash management in the UK. And Steve is CEO of Smart Technology Solutions. They develop leading payments acceptance software applications that maximize choice and flexibility. So with a voice from the cash world and a voice from the non-cash world, I think we're well placed for a good debate. So let's meet the panelists. Mark Trevor, your face has just popped up on the screen. Hello Mark, how are you?
Morning David, very well, thank you. Very well indeed.
Great to have you with us, Mark. Just thought to start off, can you tell us a little bit about Vaultex?
Sure. We're 10 years old as a business. We started life as a cash processing business. We're a joint venture between Barclays and HSBC, and we manage all of their branch and customer cash processing needs throughout the UK. You mentioned earlier, David, that we were thought leaders in cash management, and that title is absolutely right. Vaultex has evolved from a cash processing business into a cash management company, and we're now involved in the end-to-end management of cash, so not only processing, supplying and receiving cash, we also manage cash in transit, we manage cash device maintenance, sort of ATM maintenance, that sort of thing, and provide an end-to-end service for customers. And we also use our knowledge of the cash management supply chain to share with others through a consultancy function we've got, where we work with central banks, commercial banks, retailers, and those looking to invest in cash management globally, to help them optimize their cash supply chains. So we've very much been driven by emerging consumer behaviour with regards to cash, and I look forward to talking a little bit more about that later on.
Wonderful, thank you very much. Great to have you here. And our second panelist is Steve Turner. Hello, Steve. How are you?
I'm well, thank you.
Great to have you on board, Steve. Tell us a little bit about smart technology solutions.
Okay, well, I was thinking if you'd asked me to do this about a year ago, I'd have had no interest in cash whatsoever. But in fact, in the last few months, we started doing some work with Glory Global, who do payment cash recyclers and cash handling devices. We've integrated our card payment software with that and did a demo at NRF last year, and we've sort of gone under the slogan of making cash cashless. So with our payment applications, you just take the payment and we can do automatic cashback and split payments and so on. STS has been going for 20 years providing card payment software. In particular, we see it as sort of glue software to stick things together in ways that haven't been done before. And recently we've developed a new product to sort of keep payment systems running. We felt there has been a lot of emphasis on trying to create payment systems but not on keeping them running. So that's what we do. I feel we sort of patch a lot of holes in the payments industry by joining things together in novel ways and also in keeping everything running.
Make cash cashless. That's a good one. I like that. Well, I think, from what you both said, we've got some good experience and some good knowledge to discuss this topic. So before we get going, I'd like to ask you, the audience members, a question. We're going to launch a poll that's going to ask the question about your payment habits to see what type of payment audience we've got. So the poll, which should be coming up now, is: have you used cash in the past 7 days? Can you please respond yes or no very quickly? Have you used cash in the past 7 days? Cast your vote and press the submit button now. We're just getting the votes in here. Okay, I think we'll close the poll there. Close the poll, and do we publish the results? Are they up? Public, there we go. Whoa, well, we've got an overwhelmingly cash audience listening today, which kind of isn't surprising because we are both cash organisations. Brilliant. Okay, let's get into it. Our first theme: the role of cash in the modern economy. So today, 85% of worldwide consumer spending is in cash. In Europe, that accounts for 60%, although, as we'll see, that varies country to country. Cash is crucial to consumer spending and therefore the economy. It is the most used payment instrument. But consumer spending habits are changing. The payments landscape has evolved, and there are now more options for consumers to pay than at any other time in human history. And I think this presents an opportunity for those in the cash industry to evaluate and ask some difficult questions, such as: what is the role for cash? What does the future hold for cash? Is there a need for product innovation in cash? And finally, in this environment, are new strategies needed for the cash cycle? All very important issues, but it's these three that should be coming up now that we're going to look at today. And I should point out before we get going, what we want to do is move away from discussions about the benefits of cash and more towards the role it will play in the economy for years to come, and how we, the cash industry, can work with the payments industry in some instances and adapt to assist this. So I mentioned earlier, cash use varies quite significantly across Europe, and this provides a fascinating insight into the global payments landscape, with individual countries mimicking the full range of the worldwide cash cycle. Europe should just have swept across your screen there, and this shows total cash use across Europe, and as you can see, In 20 out of 28 countries, it represents over half of all payment transactions, which proves the earlier point that cash is still and by far the most used payment instrument, especially in retail or person-to-person environments in Europe. But it is a fragmented picture. Indeed, as you can see, there is a growing divide there between the north and the south of Europe, and also between the east and the west of Europe. And this fragmentation is evident when we look at individual countries in a bit more detail. So if we look at a cash-heavy country, we look at Hungary, and where the cash cycle seminar is going to take place. Cash accounts for 73% of all transactions. There's 5,000 ATMs, and they have a population of just under 10 million. And they have quite a high unbanked percentage there as well, so a lot of people depending on cash. If we look at if we look at Germany, which represents the average cash use of a European country with 61% of all transactions, 85,000 ATMs servicing their population of 82.4 million. And finally, if we use the United Kingdom as the opposite end of the scale from Hungary, where cash accounted for 50% of all consumer transactions in 2015, 70,000 ATMs servicing the 65 million people across England, Scotland, Wales and Northern Ireland. And Germany and the United Kingdom have similar low levels of the unbanked. So this demonstrates that cash is important to Europe, but it's a very fragmented landscape, which means that there is not a one-size-fits-all situation when talking about the future of cash, the future of payments in Europe. Okay, so that's just introduced us into this first question, what is the role of cash today? I'd like to bring in the panelists. Mark, if I could bring you in first, how do you see the role of cash today?
Thanks, David. I mean, I think the cash still remains an important channel for consumers in the world, as the statistics show, particularly in the areas of retail, travel, and entertainment. And I know you said let's not have a debate around the advantages or disadvantages, but if you just look at the features of cash, I guess I'm trying to answer the question: why is it still an important payment channel? Why do people like it? Looking at its features of it's got anonymity, speed of transaction, certainty of transaction. People use it as a store of value, as a budgeting tool. People trust it, and I think those are the reasons why it remains important globally, and gives consumers a choice. And I'm all for choice. I'm very much in favour of the other payment systems and methods, but I think it's important that consumers have a choice, and I think they are responding to that by keeping on using cash throughout the world.
And Mark, from the perspective of the UK, as I mentioned there, last year it made up, it was just under half of all consumer transactions, that's cash. Do you think this is going to be a steady decline in cash use in the UK over the next 10, 15 years, or do you think the trend might stop and level off in a few years' time?
I think certainly we at Vaultex believe that this sort of declining trend of cash as a payment method will continue, but we're very much in the school that it will plateau at some point and will reach a sort of minimum threshold of cash usage. Could that be around the sort of 25 to 30%? Certainly seeing that in other countries like Sweden, the Scandinavians, whereas, as everyone on the call will know, the acceleration towards if not a cash-less society, a less cash society, as we like to call it, it has been quicker. I definitely think that we will see continued decline in cash usage in the UK. Although, looking back, it is interesting to note, during the fight there are some unpredictable outcomes with cash, as we saw in the last, in the recent financial crisis, where I think from sort of 2011, for 2 or 3 years, cash transactions picked up again and started to climb to near their sort of pre-financial crisis peak. But absolutely agree, they've started falling off again, and all indications are that they will continue to fall. And as I said, they'll reach this plateau, we reckon, within the next sort of 10 years or so.
Okay, very good. So it'll kind of, maybe in the next 10 years or so, it can, whilst its role is changing, and it's going to change over the next couple of years, in the next 10 years it might find its new role and be a bit more comfortable there in this new payments landscape. Steve, can I bring you in now?
Yeah, sort of reach a new equilibrium, I guess.
Yeah. I think that could be the case. Steve, let's go to you. What are your thoughts on the role of cash today, as someone from the payments industry? The other side.
Yes, well, I think that we are observing a steady decline, and it may well plateau off, as Mark has suggested. People like cash for all the reasons he suggested. I was thinking back to how I'd used cash in the last week, and a couple of times it was paying a tip in a restaurant to the waitress, and that there isn't really a cashless way of doing that, and paying for my wife's hairdresser as well, because she likes to be paid by cash. Those are the sort of things where cash still seems to get used. Certainly in the UK, we're seeing more and more payments innovations and more ways to pay that don't involve cash. Payments is happening more silently in the background, as we see in things like Airbnb and Uber. We see that card payments are actually are quite difficult to set up card payment systems, and I think faster payments will start to play a bigger role in society, and people are using online banking more. So I think there are many challenges to the use of cash. It will have its place, it will decline, but it won't go for many years yet, I don't think. We still haven't got rid of the embossing on credit cards, we still haven't got rid of checks. Will we ever get rid of cash?
Oh, very good. Well, let's hold that thought, Steve, because we're going to come to that after the next section. What I would like to ask you though is, I go to a lot of payments conferences, and I don't really hear that balanced view of the future of payments that much when I attend those conferences. Do you think the payments industry shares the same view as you do as a whole?
Well, I think we've all been brainwashed, you know, when I'm reflecting on your question. We're all told we're in the car payments industry, that's where it's going. We have regulation from within and without telling us that we must do it like this and do it like that, and that, you know, cash is on the way out, but it's not really, is it? The statistics are different. I think we're being brainwashed.
Okay, very good. All right, well, thank you both very much for your comments there. Brilliant start. Let's go into our second theme, if the slides will let me. Here we go, the rise of non-cash payments in Europe. So we've established that cash is important to the European economy, but non-cash payments are on the rise, and we've got some statistics here to show you how that's taken place in the past few years. If we look at this period, 2009 to 2014, 5-year period, the number of point-of-sale terminals grew by 48% across Europe. That's the European average. The number of cards issued increased to 766 million. And the total volume of non-cash payments reached 103.2 billion, which represents 4.3% growth per annum. And card payments made up the majority of that number. So as we can see over this 5-year period, non-cash payments increased in Europe, but also the infrastructure for non-cash payments also increased, which is very important for them to work. I think this shows 3 things. The first is that non-cash payments is a growing and healthy market. There's clearly a consumer trend towards non-cash payments, and I think it's safe to say that non-cash payments will be a firm feature of the future. But as we've previously shown, cash is still important in Europe. So, and I think this leads on very nicely from what Mark and Steve said before, perhaps we can say that the notion of a cashless society is simply the direction of travel rather than an actual destination. And of course, the rise of non-cash payments varies country to country, and we can see this by returning to our 3 European examples. There they are, jumping on your screen there. As you can see here, even in Hungary, where cash use is high, the rise of point-of-sale terminals is equal to the European average, 48%. In Germany, over that 5 period, 37%, so below, and the UK not far behind the European average there. And if we bring in some more recent figures for the year 2015 from the ECB on point-of-sale terminal growth, quite small growth in Hungary in comparison to previous growth. Germany, there was negative growth, and the UK, there was a whopping 50% growth in point-of-sale terminals in 2015. And if we also look at cards per inhabitant, in Hungary, 0.9 cards per inhabitant, which is towards the low end of the European scale. Germany, of course, is bang on the average, 1.8 cards per inhabitant. And in the UK, we're at 2.5 cards per inhabitant, which is, you know, around about, I think it's the second highest actually in the European Union. And of course, card use varies country to country, but I think the point still stands that as cash use is fragmented in Europe, non-cash use is also fragmented. Okay, so we're going to go to another poll now, and we're going to ask the audience a question. So we've been talking here about the rise of non-cash payments, but the question we want to ask you is, do you think that Europe will one day be cashless? So that poll is up on your screens now. Yes, you've got a no, or some countries will be. Cast your votes now. Coming through now, we're at... Shall we close it there? Close it there. Yeah, got a lot of the votes in. 91% turnout on that vote, which is quite high. Here are the results coming in. Ooh, it's a big no. 63% of you do not think that Europe will one day be a cashless society. I suppose that fits in well with the payment habits of this audience that we got earlier on. 33% said some countries will be. I assume we're looking at kind of the Nordic countries there, you know, your Swedens and maybe your low cash use countries at the moment. 3% say yes. Okay, that's good. Thank you very much for your votes there. Now, if we go to the panel, Steve, can I bring you in? How would you have voted in that poll?
Well, I would have said yes, they will eventually, because you didn't put a time frame on it. But I think that I might not be alive then when it happens. I think eventually we will go cashless, but just not in maybe any of our lifetimes, really.
Yeah, I have asked that question before, and it is quite open-ended because it doesn't really give a time. You know, do you think Europe will ever go cashless? Well, maybe in hundreds and hundreds of years. But I think that was quite a balanced response from the audience there. I think you actually preempted the statement that a cashless society is more of a direction of travel than an actual destination in your opening remarks. Can I just ask you a bit more about your thoughts about that statement, and if you agree with it?
Yeah, well, I've reflected quite a lot on this question. But we live in strange times, really, and it's hard to know how things are going to change. I'd have told you the day before yesterday that telephone call centres taking card payments must be on the decline because of e-com and the web. But in fact, voice recognition's come along and changed this completely, and actually we're seeing more card payments being taken in call centres, things because of voice recognition being able to automate it all. You look at Cyprus, and the recent crisis they had there has meant people have taken money out of the banks and are storing it at home, which is making more cash in circulation. Then recently we were in India when they took 85% of the cash out of circulation by withdrawing the 500,000 rupee notes. And we suddenly observed a country just going into crisis because nothing could work without the cash. The markets all had to close. And I think that made a lot of people think, well, perhaps we're better off not having cash. We ought to have some electronic means. Certainly we were only able to keep going because of Uber, which took our payments in the background. So who knows what disruptor might change this? We might suddenly see cash actually increase. We might see suddenly decrease. It's very difficult to say in these days what new technology might come along and change things. And I do feel these automatic cash handling machines that sort of take it away from the cashier, making cash cashless, could suddenly have an impact on this.
Yeah, yeah, it's very interesting. If only we could predict the future, accurately predict the future. I guess everyone's business could plan ahead. Mark, if I could bring you in now, I assume you voted no in that last poll.
That's correct, David. Yep, funny old thing. I think I'm very much in the very much in the, as I said earlier, we're moving to a less cash Europe than perhaps a cashless Europe. I think, if you look at some of the other trends that we've heard a lot about over the years, such as, I think, back in the sort of late 70s, early 80s, they were talking about paperless office. Well, I don't know about other people on this call, but my office is still rammed full of paper, and we seem to spend a fortune on photocopying paper, so we haven't really made much progress with that one. And then the other one I think that's quite interesting is e-books. Again, I think that everyone predicted the death of the paperback or the hardback book with the advent of e-books. And again, if you look at the statistics there, e-books have plateaued, and I think growth in the last couple of years has been single digit for e-books, and we've seen a resurgence of profits in the publishing houses. So yeah, that to me, we've heard a lot of these predictions in other areas about the death of a particular consumer choice, shall we say. So no, I'm very much in that camp of certainly less cash but not cashless.
And as you mentioned before, your cash management organisation Vaultex, what's been the impact on your business on the rise of non-cash payments? Have you had to do some drastic restructuring, or have you planned well ahead to make sure you're ready to respond to this changing demand for cash?
I'd like to think we planned ahead, but it certainly has had an impact in the cash processing stroke cash management industry. And I think if you look at the industry, and again, this applies globally, traditionally it's been an industry of high fixed costs, people investing in big, as you'd expect, highly secure cash processing, cash in transit sites with a lot of expensive machinery for sort of industrial processing, sorting of notes, etc., etc. And I think as the demand for cash has fallen, certainly within the UK, that's with these high fixed costs, that's driven up the unit cost of processing cash. So it's forcing us to look at our model and say, actually, we need to try and move to a more of a variable cost model, if you like. Otherwise, it has a bad outcome in that the costs are going to get prohibitively high, and that variable cost model, I think, is looking at the distribution of cash again. And I was interested when Steve talked about his tie-up with Glory Global, because I think that that hits the nub of it. It's about making the distribution of cash more distributed perhaps than it is now, and bringing in automation so that cash can be processed more efficiently in big retail store cash offices, in the back of bank branches, in their cash offices, rather than moving it backwards and forwards expensively by cash in transit trucks that run on diesel and pump fumes into the environment, to cash centres like ours, which may sound a bit perverse given that we've got 13 cash centres in the UK, but we're very much of the view that we need to move towards more of a local recycling of cash distributed model. And that's certainly, we've been driven to that thought by this change in consumer behaviour towards cash.
Well, Steve, if I could bring you back in there, Mark touched on the new product, the Making Cash Cashless product, can you tell us a bit more about that and how you think that's going to impact cash use and also maybe the cash supply chain as well?
Yes, certainly. Well, one of the things that is an advantage is that when the cashier rings up the transaction on the till, they don't have to ask you whether you're taking cash or what payment method you're using. They can just hit the pay button, and it comes across to our software, which processes it and offers to the card holder or cash holder what means they want to take the payment, and whether they want cash back as part of the process, or whether they want to split the transaction, part cash, part card payment. So it sort of automates that whole way of working. And in some ways, I see that there's almost a difference between the sort of receipt which gets generated as like an invoice, and then you take that invoice to be settled, and it could be done through cash, through credit card, through coupons, through whatever means possible. So in a way, you're taking away the responsibility from the sales assistant as to how the actual invoice, as it were, gets settled. And we can automate all of this, and it can be with more means of payments. They can all be integrated with this in a much easier way. So it separates the sort of the point of sale where the actual transaction is initiated and the receipt or invoice is generated, and the means of settling that invoice or receipt.
And where is this happening now, Steve? If so, which countries?
No, we've just been demoing this at NRF, so this is the first time I've seen anything like this. This is all very new, but you can see it's the way that things will go.
Oh, very interesting. So watch this space on this new technology. Very good. Mark, if I could just come back to you. That's all very interesting, isn't it? And that fits in, as you said earlier, you can see the benefit of that to kind of improving the efficiency of the cash supply chain as cash use declines. Do you have any more thoughts on that? And I also want to ask you if you think that the European countries can learn anything from the payments landscape in the UK and the decline in cash.
Sure. Yeah, just sort of picking up on Steve's point, we're seeing quite a lot of, as I alluded to earlier, or we're working with retailers, financial institutions around the automation of cash within their stores and branches, and also this sort of, and I think this is what Steve was touching on, the sort of separation of cash from the physical to the virtual. So in other words, the cash gets collected in a smart device and gets converted to a digital value, sort of early value or same-day value, and then that then lessens the importance or the speed required to move that physical cash to its next point in the cash cycle. And we're doing quite a lot of work where we're actually going into stores and bank branches and helping them achieve that smarter, more automated method of handling cash. Coming to your question around, what lessons can be learned from the UK? I mean, I think the UK is quite an interesting place to be in the payments landscape at the moment. As Steve's alluded to earlier, with all the number of new payment systems that are emerging. I think on the cash side, there's a lot going on, as people will may be aware that we've got polymer notes coming in. We've had a £5 polymer note launch. We've got £10 coming later this year, £20. Subsequently, we've got a new £1 coin coming out next month. We've got in cities in this country, we've gone cashless. Certainly in London, we've gone cashless on our public transport system, and it's making us all think in the industry and both wider payments and cash about how we make things more integrated, more efficient, and try and drive out some of these costs that could be a problem, as we move into a less cash society. The final thing I would say is that I did read an interesting article in the Manchester Evening News the other day, which said that Uber in Manchester have set up a way for people to pay with cash, just when you thought we were going completely electronic with some of these disruptors in other sectors.
Just when you think you're out, they pull you back in. And that's a good point to pick up on the last theme, actually, digital innovation and the use of cash. Brilliant. Okay, thank you both very much. I think we'll move on to our final theme now. Mark just popping up there. Yeah. Lovely. We're doing question time. Another poll. The final poll of the day. And the poll here we're going to ask you is, what % of European millennials use Apple Pay or mobile pay? There's a couple of options there, 1 to 5%, 5 to 10%, 10 to 25, 25 to 35, or 35+% of European millennials that use Apple Pay or PayPal mobile pay. Please cast your votes now. Votes are being cast, they're coming in. Another high turnout. Okay, voting is closed. And the results on your screen now. Okay, let's have a look at that. 14% of you think European millennials use Apple Pay and PayPal mobile pay. 38%, the winner on 5 to 10%. 28%, 10 to 25%. 10% of you think 35%. Wow, okay. Well, okay, interesting results. So kind of a mixed bag there, but most of you thinking 5 to 10% or 10 to 25%. Well, you will not be disappointed, because you will find out in a few moments. But first, European millennials. I'm talking about European millennials because I think they're a very good starting point to assess our final theme, which is, do consumers want digital innovation? Millennials are known as the first digital generation, but are they the first cashless generation? And that's what we want to really explore here. And I'm picking up a lot of information here from a Vocalink report that looked at the spending habits of millennials in Germany, Italy, the United Kingdom, and in the Netherlands. And the report showed that for millennials, cash remains important for person-to-person payments. Millennials use cash as part of their mixture for everyday consumption, so as part of paying for shopping, eating, and socializing. They see cash as a key budgeting tool. And finally, and this one's quite interesting, a lot of millennials are influenced by how their parents spend. So how their parents pay for things influences their spending habits. Very interesting results. I recommend looking at the study. And I think what this shows is that the European millennials, they may be the first digital generation, but they are not the first cashless generation. And I think this is proved if we look specifically at their use of mobile pay, which is why I asked that question. Well, if we look at millennial use of Apple Pay, 2% of millennials in the UK and Italy have used Apple Pay, 1% of Germans, and 1% of millennials in the Netherlands. If we look at PayPal Pay, 3% of millennials in the UK, 4% in Germany and the Netherlands, and 5% in Italy. So those who voted 1 to 5%, you have won. There's no prize, but you can be happy that you have a good sense of how millennials are paying in Europe today. I should point out that we are just looking at Apple Pay and PayPal Pay here, and in the Netherlands there is a local payments platform called iDeal, which is used by quite a few. I think it's about 15 to 20% of Dutch millennials. So if you add some other mobile payment platforms in, the results are higher. But I think what this shows is that while mobile pay uptake will increase, perhaps it won't follow expected trends if two large brands such as Apple Pay and PayPal aren't gaining a large market share. And it's also interesting looking at millennials' use of mobile pay at the percent of those that are classified as lapsed users. That is, they've tried to use mobile pay and stopped before purchase. In the UK, this is quite high, 20% of millennials stop making a purchase when using mobile pay. 21% in Germany, 19% in the Netherlands, and very high in Italy, 24%. And I think what this shows is that millennials, the first digital generation, They're using their mobile phones to make purchases. They'll buy an app, they'll buy digital content, or they'll shop through their mobile phone. But what they're not doing at equal levels is using the mobile pay function of their smartphone to make the payment. The study concludes that on cash, millennials like to use it because it has universal qualities. It's accepted in the majority of places. It's very reliable. It doesn't run out of battery. You don't need Wi-Fi to use cash. They also, and I love this phrase here, they like the old school simplicity of cash. It's there, you can use it. So they use it even though there is choice. There is a wide choice available for them today, and they still use cash to pay for certain things. So, and Mark mentioned this earlier on, the future of payments is choice. I think that is kind of the way we should be looking at the role of cash in the payments landscape of the future, and also how the payments industry should look at the future of payments. It is choice. But I think what this study that we've looked at there begs the question, what is the impact of payments innovation, and are all these innovations actually meeting a consumer demand? So that's our final theme covered. I'd now like to turn to the panel, and I'm going to start with Steve. Steve, you're part of the payments industry. Let me just pose the question to you. Are digital payment innovations meeting a real consumer demand?
Well, David, I think that it really depends on which ones. And you see people using online banking quite a lot. Checks are gone. You very find a millennial writing a check these days, but they're not using Apple Pay. They're happy to use Uber, Airbnb, iZettle. They're happy to use that. But I'd say that what really affects people is the embarrassment factor at the point of sale as to whether they take things. Now, if you remember when contactless cards first came out, you had to ask to pay by contactless, and they'd rummage around under the counter and produce their contactless device reader, and you could pay by contactless. So it meant that many people didn't pay by contactless. You had to ask first. But now the sales assistants realize how smooth the transaction is with contactless. They actually prompt you or take your card and tap it on for you or ask if you want to do contactless. So the sales assistant is guiding you through that, and the embarrassment factor is taken away. Cash, there's no embarrassment ever. People will always accept cash. And so that's going to be the way that people fall back to paying, because they think, oh, well, at least you can pay by cash. Apple Pay is a bit confusing because people don't really get guided by the sales assistant how it works. Is it above £30 or not £30? Is it going to work with the card you're using? Because some terminals aren't accepting some of the card types, even though they accept the card type when you plug it in. So it's a very confusing experience, an embarrassing one. And I think what we'll see is that the payments that are simple, that they're used to, like card payments and cash, will work. Anything new, people are going to be needing some guidance to make it work.
Very interesting. Yeah, I think there's so many new payment innovations that come out. I think maybe people get ahead of themselves and forget that they have to take time to embed, both from a consumer's perspective, but also from a merchant's standpoint as well. I suppose, Steve, would you say that with your new kind of making cash cashless and integrating cash in that point of sale terminal in a new way, do you see cash as being part of payment innovation? Can cash be part of payment innovation?
Yeah, I really. This is one of my things I really wanted to talk about, because we see online stores growing all the time, really challenging the bricks and mortar stores. The bricks and mortar stores have got to offer a new experience to people, so they think it's worth going into the store. And part of that is that they need to see something different. They want to see a sales assistant who perhaps takes a personal interest in them as they go around the shop, wanders around maybe with a tablet, showing them different ranges of products that are available, showing how things work together, and basically taking you around the store, guiding you through the sale. Then when it comes to the point of payment, that's got to be smooth. You don't really want to be handed over, I need to take you to the till now to pay. You want to really be able to accept pay there and then wherever you are in the store. And if it can be done simply with a iZettle reader, or just tapping on the tablet, maybe putting your PIN in on the actual PIN pad, PIN on glass as it's talked about these days, that will make the transaction smoother. But where does cash fit in? Well, this is where some of these cash recyclers like or a global are providing, if these were strategically posted and positioned around the store, it'd be very easy to wander over with the sales assistant and say, okay, well, if you want to pay by cash, just post your money in here, and that will get smoothly dealt with and appears on the screen. They can have the receipt emailed to them, and the parting words from the sales assistant can be something like, oh, well, you look beautiful in this dress, or why don't you come back next month because we've got a special offer on such and such, but just a positive end to the transaction, rather than the rather lame response we tend to have these days, which is, do you want the receipt in the bag, sir? And so I feel that if cash can be merged with card payments, so it's all just a way of settling a transaction easily and simply in the store with a sales assistant wandering around with a tablet guiding the sale, this is where we'll see it all form part of payments innovation.
Thank you very much, Steve. Mark, can I bring you in now? Do you, what do you think of the question? Do consumers only want digital innovation? And do you have any comments on what Steve just said?
Yes, I mean, I think I'm in broad agreement with what Steve said around, and it comes back to this piece that we've been talking about, you know, throughout the webinar around choice and providing choice. I mean, we talked to some of the very big, or all of the big retailers in the UK, and they're very much of the view that you need to be providing a choice to customers and accommodating how they want to pay. But I agree with Steve. You know, there needs to be a more seamless solution at the front end, rather than the sort of convention of joining a queue and you're going through the sort of the till type approach. And I think we're starting to see that with some retailers. I agree. I think, you know, online, I think we're the biggest online or e-commerce users in the UK globally, closely followed by China. So that's going to drive the bricks and mortar stores, as Steve said, to try and come up with more innovative solutions at the point of sale. I think the consumers, my view is that the main alternative to cash solidly remains the credit or the debit card. And while we've had a plethora of other payment means launched within the last few years, and you can't help but think that a lot of these are just solutions looking for a problem, rather than thinking it, you know, from the other way around, what's the actual customer need. And therefore, you know, to me, that's why credit and debit card have stood up as the sort of main alternative to cash. I think in terms of, you know, I've got 3 millennials that live in my house in the form of 3 teenagers, and I asked this question of them at the dinner table last night, you know, and they're very much in that. They're not adopters of whilst they're very digitally and technically savvy, they are not adopters of Apple Pay or mobile payments in general. And I asked them why, and they said it's an issue of trust. Basically, they're not comfortable, having heard some of the scare stories around this technology. They're not entirely comfortable with relying on that technology. And as previously said, people are quite happy to use to shop online, but they use conventional card, credit and debit transactions to pay for those purchases. So I think there's an issue of trust, and I think there's going to have to be an awful lot of marketing expenditure by the alternative payment providers to try and build that trust among consumers. Whether they have the appetite, you know, whether there's a business case for that, it remains to be seen. Perhaps that's, you know, one of the main reasons why we are seeing such a low take-up rate in some of these things like Apple Pay and mobile pay more generally.
Yeah, we at Cash Services just had some results of a consumer omnibus we commissioned recently into changing consumer payment habits, and what we found in this research was the majority of people who are using contactless or mobile pay were previously debit card users, chip and pin users, and also one of the big concerns around using contactless and mobile pay is the security fears as well. And we've actually got some more work to delve down to understand that a little bit more that we're getting underway very soon. Well, thank you both for your comments there. We've had quite a few questions in from the audience, and we've got around 5-10 minutes left. So I'm just going to ask you a few of those. We actually did have a question. Someone asked if you can download the slides after the session. There'll be a recording of the session that'll be available soon, and we can send the slides round as well, so you can have access to those. Okay, the first question I'd like to ask we haven't touched on this, financial inclusion. Is financial inclusion helped or hindered by cash? Mark, can I ask you to respond to that one first, please? Just a few thoughts.
Sure. I mean, helped, I would say, and I think that's one of the. If you look at the government intervention in cash in the UK around the provision of cash machines and sort of branches, be they bank or post office branches, for the people to collect payments, then there's very much a feel of cash helps financial inclusion, and there are I forget what the number is, but I think it's a couple of million in the UK of unbanked people, and I know globally that figure's a lot higher in many other countries. So, and I think cash does meet a very important gap there, and addresses the problem of financial inclusion.
Steve, can I bring you in? I guess I don't know if you've looked at this before, but are there kind of new, non-cash banking instruments or payment instruments that can kind of bring the unbanked or those that aren't using mainstream financial services into the fold a bit more?
Yes, it's not something I've looked at greatly. Obviously, cash provides a way of dealing with this situation, and people are very much aware then of what cash they have and where it's going and that sort of thing. It's the sort of bridge between that and the rest of the world, which seems to be very electronic, which is hard. And again, I guess the more places that will accept cash and sort of translate it into the virtual cash world, the better. And again, I could conceive of sort of strategically placed cash accepting machines put around towns, which could be used in tie-up with smartphone applications to actually do this in a more automated way. I guess this is under the premise that these sort of people have smartphones, and they may not have smartphones, and so they're really not able to do that. But I guess it will address a certain demographic, be able to do that.
Yeah, I think so too. And there's actually, well, M-Pesa. Yeah, sorry, Mark, come back in.
Yeah, no, sorry. I think you're about to say what I was going to say around M-Pesa, so I'll let you carry on, David. Okay,
well, correct me if I'm wrong, but yeah, M-Pesa in Kenya and I think in India as well is a non-smartphone mobile banking that allows people to shift money around their accounts and make cash withdrawals at certain points. And it's quite a basic technology, so that could be something that could be introduced here. Is that kind of what you were going to say, Mark?
Yeah, exactly what I was going to say, and that we might have been guilty of bashing mobiles this morning on the call, but of course in Kenya and, as you said, more latterly India, M-Pesa is flying along, and I think interestingly, that also comes back to Steve's point around the integration of the digital and the physical, because I believe there may be someone on the call that can correct me if I'm wrong, but in M-Pesa you have cash at one end, which is converted into a digital form on a conventional phone, as you say, not smartphone, and then that can be transmitted to somewhere else, to another person who can then convert that into cash at another point. So it's a point-to-point, and I believe notes in circulation have actually gone up in Kenya which is sort of cited as the reason. The success of MPs has actually driven the more use of cash, although it is this interface between the physical and the digital.
Yeah.
I would say M-Pesa works really well in Kenya. It's really helped sort an awful lot of problems out in M-Pesa from experience I know from there. In India, we never saw M-Pesa at all. It would really have helped in that financial crisis wherever we were in India. It wasn't there, and it would really have solved a lot of the problems they were having with no cash in circulation.
Yeah, certainly. Very interesting times watching what's happening in India. I'm sure everyone on the call has been monitoring it very closely. I want to ask another question. We've got a couple of minutes left. Well, I mean, a couple of questions that have been asked. How should digitalization, if I can get it out, support cash in circulation? And another question, have we seen the tipping point for mobile and contactless payment adoption? I think we've kind of covered those in our discussions, but Steve, is there anything you'd like to add on those points, or anything else you'd like to add to close the webinar today?
I don't think I have got anything to say on that, if you'll forgive me, David.
Okay. Brilliant. Well, I can bring Mark in. Mark, have you got any other comments on today's content?
The only thing I would sort of finish on is, I think that what's been encouraging today for me has been Steve, representing the non-cash part of the payments industry, the sort of agreement that we've had on the closer integration between the two payment channels. And I think from a cash perspective, as I've said earlier, the key is about going forward, is about big users of cash, retailers, banks, etc., managing their cash more smartly and with automation to the point that Steve has suggested to drive down the cost of that payment method. Because I think if we continue to stick with our conventional model for cash management, that could lead to cash pricing itself out of the payment market, perhaps.
Well, that's a very nice way to end it, Mark. We just had a comment in from from an audience member that said between 2005 and 2010, cash in circulation has doubled in Kenya. I imagine a lot of that's due to M-Pesa and what it's done there. Brilliant. Well, we are out of time, but I think we've covered plenty for 60 minutes worth of discussion. Thank you very much, Mark. Thank you very much, Steve. I really enjoyed that. I hope you did too. As I mentioned, we're going to continue this discussion in Budapest at the European Cash Cycle Seminar in March. There's a link there where you can find out more information and register. And if you want to find out more information about cash services, the research we're doing on the future of cash, don't be shy. Please send us a message. And yeah, there'll be a live recording. That's a live recording. Is that right? A recording of the live session available for you to listen to again. And yeah, have a great rest of your day. Thank you very much, everybody.